Have you ever wondered how money moves around the economy, powering businesses, creating jobs, and shaping our daily lives? Every dollar we spend doesn't just disappear. It flows from consumers to businesses, to banks, to the government, and back again, creating a continuous cycle that keeps the economy alive. Understanding this flow helps us see why spending, saving, and investing matter, and how decisions at every level, from your paycheck to global trade, affect the bigger picture. Let's break down how money truly moves through the economy. Today, we will talk about how money flows through the economy. So before we start, make sure to hit the like button and subscribe to my channel. Understanding the movement of money in an economy is crucial for comprehending how nations grow, how businesses thrive, and how individuals are affected by economic decisions. Money is not static, it circulates continuously, connecting households, businesses, governments, and financial institutions in a complex web of transactions. At the most basic level, money flows when people earn, spend, save, and invest, creating a cycle that fuels economic activity. This process, often visualized as the circular flow of income, illustrates that every economic action triggers a chain reaction impacting multiple participants within the economy. By studying these flows, we can gain insight into employment trends, business performance, consumer behavior, and the overall health of the economy. The circular flow of money. The foundation of understanding economic money flow is the concept of the circular flow of money, which demonstrates how households and businesses interact. Households provide labor, land, and capital to businesses, receiving wages, rent, and profits in return. They then spend this income on goods and services produced by businesses, completing the cycle. In this loop, money is constantly exchanged for resources and products, ensuring continuous economic activity. When households spend more, businesses earn more revenue, which allows them to expand, hire more workers, and produce more goods. Conversely, if spending slows, businesses may cut back on production and employment, which demonstrates how sensitive the economy is to the flow of money between its participants. The role of businesses in money circulation. Businesses act as the primary drivers of money flow within an economy. They produce goods and services, and in doing so, pay wages, rent, and dividends to households and investors. These payments, in turn, increase household purchasing power, which is then spent back into the economy. Beyond paying households, businesses also invest in other companies, technology, and infrastructure, stimulating additional economic activity. Large corporations may have global supply chains, meaning that their spending circulates money not only domestically but internationally, creating interconnected economies. Essentially, businesses act as both earners and distributors of money, channeling it to multiple sectors and ensuring the continuous flow that sustains economic growth. Consumers and their impact on money flow. Consumers are the lifeblood of the economy. Every purchase they make sends money into the business sector, which then cycles back as wages, investment, and taxes. Consumer confidence and spending habits significantly affect how quickly and effectively money circulates. High consumer spending typically signals a robust economy, encouraging businesses to expand and innovate. On the other hand, low consumer spending can slow money flow, reduce production, and trigger economic downturns. Additionally, the way consumers choose to save or invest their money influences the broader financial system. Savings often move into banks or investment vehicles, which can then lend or invest those funds, keeping the economic cycle moving in different directions. The banking system, facilitator of economic flows, banks, and other financial institutions are essential intermediaries in the circulation of money. When individuals deposit savings, banks use those funds to provide loans to businesses and consumers. These loans can finance new ventures, housing, education, and infrastructure projects, injecting additional money into the economy. Banks also facilitate investment through credit and payment systems, allowing money to move efficiently between sectors. Central banks, such as the Federal Reserve in the United States, regulate money supply and interest rates, influencing how easily money flows through the system. For example, lower interest rates can encourage borrowing and spending, while higher rates may slow the flow to control inflation. Thus, banks act as both repositories and accelerators of money movement, government, and fiscal policy. The government plays a critical role in guiding the flow of money through taxation, spending, and regulation. Taxes collect money from households and businesses, which the government then redistributes through public services, infrastructure projects, and social welfare programs. These expenditures inject money into the economy, stimulating demand and supporting employment. Governments also use fiscal policies, such as stimulus packages, to boost spending during economic downturns or curb inflation during periods of rapid growth. Public sector wages, contracts with private companies, and social benefits all serve to keep money circulating. Additionally, governments can influence private sector behavior through subsidies, tariffs, and investment incentives, directing money toward specific areas to foster economic stability or growth. International money flow. In today's interconnected global economy, money does not stay confined within national borders. Trade, foreign investment, and remittances contribute to the international circulation of money. When a country exports goods, it receives foreign currency that can be used to import other products or invested domestically. Foreign investments in a country's businesses or government bonds inject capital that further drives economic activity. Similarly, remittances sent by workers abroad provide essential income for households in developing countries, stimulating consumption and local business growth. Global money flows also introduce volatility, as changes in exchange rates, international policies, or geopolitical events can accelerate or slow economic activity in multiple nations simultaneously. Thus, understanding money flow requires both domestic and international perspectives. Savings, investments, and the multiplier effect. Savings and investments are crucial components of economic money flow because they allow for future growth. Money saved in banks or investment funds does not remain idle. It is lent or invested in productive ventures, generating returns for both individuals and businesses. This process creates a multiplier effect, where each dollar invested circulates multiple times through the economy, stimulating more production, income, and spending than the original amount. For example, when a government invests in building a highway, construction workers earn wages, suppliers provide materials, and local businesses benefit from increased traffic, all of which amplify the initial expenditure. Effective circulation of money through consumption, investment, and reinvestment ensures a dynamic economy capable of sustained growth. The continuous cycle of money. The flow of money through an economy is a complex, interdependent process involving households, businesses, banks, governments, and international actors. Each participant's actions, spending, earning, saving, or investing, affect others, creating a continuous cycle of economic activity. Understanding this flow provides insights into how policies, consumer behavior, and financial institutions influence overall economic health. Economists, policymakers, and business leaders monitor these flows closely to ensure stability, promote growth, and prevent disruptions such as inflation or recession. Ultimately, money is the lifeblood of the economy, and its movement connects every sector, shaping the prosperity and well-being of individuals, communities, and nations. If you liked this video and would like to see more like it, please give it the thumbs up, leave a comment, and click the button to subscribe.